Test, test, test. Testing 1, 2. Yo, 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 yo. What's up? What's up? Aha, crazy eyes. What's going on? Can you hear me? Yo, 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 yo. What's up? Aha, crazy eyes. What's going on? Can you hear me? Yo, yo. Give everyone a little minute or two to join up. Yo, yo. Give everyone a little minute or two to join up. All right, we got someone in the chat. Let's see. I'm just gonna send out the link to my Twitter and everywhere else. Give me a minute. All right, we got someone in the chat. Let's see. I'm just gonna send out the link to my Twitter and everywhere else. Give me a minute. All right. Oh, one more. Aha, crazy eyes. Yes. Thanks for joining, man. What are you doing in this market, man? What do you got going on in this market? What are you doing in crypto, concentrated liquidity? You know, we've been in this sideways consolidation for not 2 months, more than 2 months, since March, man. Look at that. The perfect time to be generating yields. You know, most people are just holding those coins. They're just hodling, just waiting for the market to go up, right? That's a painful trade, man. Usually people capitulate and say, you know what, screw it, I'm out. Especially after we broke this low here. We broke this pivot low here. Got everyone scared. Look at that volume, man. Look at that volume right there. Got everyone scared. Scaring them out. Like, oh shit, it broke that low. I'm out. And then look at that, man. That's what crypto does to you, man. It likes to fool you. And it's so easy to do for big players. Because there's not a lot of liquidity, especially during this time. Liquidity is very low. People are scared. They pull the liquidity out of the market. It's easy to push the price around, right? So get people out, stop them out, use that liquidity event to fill their bids, and then rip it right back up. And then get them thinking, ah, shit, I sold the bottom. Well, I ain't going to miss the top. And then they buy. I'm thinking, man, the way it's looking, man, I think it could go to 70. At least on this run, this short squeeze, right? They got the squeeze going, gaining momentum. You know, haven't had that big daily candle yet. You want something like this big, like that big, you know, to show, okay, that big and a wick. You want a wick like that, man. You know, just showing like boom. Then the buyers step in like, you know what, I'm grabbing this. They just fight over the carcass. The carcass of the capitulator. The person that FOMO'd up here, it's like, oh, we're going to break it. We're going to break the highs. And then boom, grind them down very slow. Over weeks. Get that slow price action. Maybe a little scare here and there. Pop it up. Give them a little hope. Resets that. You know, you don't want to just grind it straight down. And you don't want to go too violent too fast if you're trying to get low prices, right? You want to just kind of steer them, you know, steer the sheeple into that slaughterhouse, right? Get them in there, give them a little hope to kind of, you know, comfort them and kind of reset that sentiment and be like, you know what? Okay, now we're here at 63.1. I'm okay now. It looks like the market's going up, and then boom, the death blow right here. And then you can see them coming in, buying it up. Everyone buying it up. Like, well, and if you're probably looking and you're like, well, you know, it looks like support would have been at 52.2, right? Why is everyone buying up here at 54, right? 54K or even 50, what was it, 53.5? Or yeah, about 53.5, right? Everyone's front running each other. You know, like, hey, I think 52K is a good buying opportunity. That's all you heard in the space for quite some time. If we get down to 52K, 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 you should buy. People start front running their bids, and that's what creates that cushion of liquidity. It's just that sentiment, right? It builds over time. That's why it's hard to predict price where it's going to go, right? And as a liquidity provider, you can play both sides. You can play both sides of the coin here, right? Yeah, let me post this one more place before I continue that thought, because I was going to post it in like DeFi Dojo if people are interested. Oh, don't want to tag everyone in there. I'd get in trouble. I would get banned. All right, so anyone's interested in the live stream on Concentrated Liquidity, join me on YouTube if you'd like to talk. All right, but yeah, you create that liquidity event, and eventually it's literally like as simple. If, you know, what I've learned over the years is to keep everything simple, right? The more complex a trading strategy gets, the harder it is to execute. It's just simple. It really is that simple. Like you make it difficult putting a bunch of lines, eventually you get that analysis paralysis. You ever seen that meme chart where fucking lines are going all over the place? That's exactly what I'm talking about. You look at that chart, you're like, what the hell am I looking at? Eventually, you have so many lines, so many levels of confluence. It's hard to predict. Well, not really predict, but just get a feel where price is going. But yeah, that's all that happened, right? They steered them towards the slaughterhouse, got them right where they want them, liquidated them. Everyone's watching this level, right? And thinking, okay, I'll sell here at 56, 55K. I'll buy back at 52K. It's kind of the idea, right? Doesn't get to 52K. People are like, oh shit, this thing's going to go up. Buy back in, right? And then demand comes back and overcomes the supply. And that's it. It really is that simple. But see, as a liquidity provider, you can play both sides. And that's exactly what I did. That's what I'm going to talk about a little bit right here. Let's see. We got some people watching. All right. But so what did I do during this time since March? Well, those that have been in my previous live streams know that I pretty much, well, I did ride Ethereum. Oh shit, that's not even as low as I got. back in September, October-ish, I bought below 1600 in the 1500s. I bought Ethereum spot. I didn't set up liquidity pools because I just felt like the reward wasn't there in the liquidity pool, right? Volume was very low. I just started accumulating, right? So I accumulated. As price began to break out, move up, I lent out that Ethereum around 1800. All documented, all on my Discord if you want to look at it. If you don't believe me, but go ahead and look. I documented as it went on. And I lent it out and I borrowed some USDC against it and farmed altcoin liquidity pairs. My favorite one was Link, as you'll see here. Link just went sideways from October. Look at that. That was just amazing. I was earning 7-8% a month, sometimes 10% per month extra on top of the Ethereum spot Ethereum gains, right? And then in March, I closed out my loan, right? And I took out my collateral of ETH and I sold. I took some profit up here around 3,400-ish. I left some for the ride. I always leave some for the ride because you never know. You can't time it. And that's what it did. It kept going up, went to 4K, and I started setting up USDC heavy concentrated liquidity pools. This is when I got aggressive in my farming during this time in March. And I was seeing some great yields during this time because volume was plentiful. There was a lot of transactions going through that creates a lot of yield. Some days I was seeing 1,800 to 2,000% APRs on Ethereum. Not all day, during like capitulation events. And those are huge, right? Those events is what makes yield farming worth it. That's what I look forward to. This liquidation event. This liquidation event. This one was really good. This in April, it was just down and just brutal, man. Look at that. But look at that. Bulls and bears just fighting over it and just creating massive transactions, right? Just the volatility up and down, up and down, up and down. They're just sweeping my liquidity in and out, in and out, in and out, right? So that back and forth action is exactly what I love because it creates a lot of yield. And then lately, yields have just kind of died off, right? After April, they just kind of died off, weren't as good, and rightfully so. Look at the volatility. If we go, oops, wrong one. This one here. Since April, April, the volatility index for Bitcoin just dropped. Look at that. Now we're getting some spikes to the upside. We might be getting some high yields very soon. Our patience is paying off. But in the meantime, I stayed in the market, kept farming those liquidity pools, generating yield. And that's what you want to do as a liquidity provider. You want to always have exposure to the market in an asset that you want to hold, right? And just keep generating those yields. Just keep the machine churning, keep it going 24/7. Forget about trying to time the market forget trying to time the market as your main strategy as a liquidity provider, right? As a liquidity provider, there's the main strategy, which is just staying exposed to the market, generating yields over time. Now you can implement optionally as an option to generate directional bets, right? Like taking a trade here and there. And that could turn out beneficial, but you got to also have your invalidation levels, right? You know, if you're taking 1 to 2% risk on your position, that's fine. You know, and you have your invalidation level and you try to get your entry as close to that as possible, that's fine. Where you get in trouble is that if you have your invalidation levels too far away. And you know, I had someone reach out to me when we were down here, and they're like, "Hey, I think we're breaking down here. I think we're gonna flush, you know, lower, right? Everything is looking bearish, and the whole Mount Gox, Germany selling, all that stuff, man, all that stuff that's meant to like mess with your head." They thought they wanted to go bearish, right? They were farming this range, but they wanted to get aggressive. They wanted to sell off the Ethereum they had in their liquidity pool, get their range super tight, and go USDC heavy. And I told them, like, hey, you kind of missed the boat, right? You kind of missed the boat, and I don't agree with this play. I asked them, what is their invalidation level? What is their risk? And they're like, well, I haven't really thought about it, but they were like certain the market was going to continue dropping. I'm like, okay, when you have that type of certainty, you really have to be cautious, right? Anytime you're certain of something in the market, you got to be very cautious. And what you want to do is map out and be honest with yourself. Don't try to like sugarcoat and say like, well, I think if we get above 3150, I'll reverse my position, right? Well, what are you basing that off of, right? We just broke below that level. You know, we broke all this here. We went below it. Is that a good invalidation? Oh, okay, cool. If that is, you can go short there. But you got to be quick on reversing your position or going back to the original plan if that doesn't work out. Now, what I did was I set up liquidity pool. I had my liquidity pools. I've been farming it. But I took a bet here around 3,800. I went USDC heavy, right? Down to, I think it was like 2,900. And the top of the range was 3,900. That was at 3,800. I wrote all this. Around this area, I went ahead and locked in that I locked in the performance from there, right? From that top. And reason why is because if the market, at this point, I was uncertain. I was like, okay, we've had this drawdown. We could easily spike back up and I would lose everything I've gained from here as far as trying to buy lower, right? So in order to not be a victim to that scenario, but it's still in my mind, I'm like, I think we're still going lower. Like I really feel like, but it just feels a little overextended, which I was wrong. It went lower. And that's the great thing about liquidity providing. You don't have to be right. You just got to be prepared and ready for both sides. All right. So what I did was I took my Ethereum and I lent it out to Aave. I borrowed USDC against it, so I was a little bit leveraged on it. But I didn't convert it to ETH. And what I did was I set up a liquidity pool at 3470 down to 2970. So it was all USDC. It was the whole loan in USDC in that range. And, that was like right up here. So I took part in all this, right? Took part in all this, and I rebalanced multiple times. And what I did here, I will show you. I'll just bring up the post. So I'll kind of show it from the beginning so I can talk through it. It should have been right here. Yeah, okay. So here's where we started. I went completely USDC at 35.40. I switched 100 to 100% ETH at 35.40. And that's simply the reason why, because if we went up, my invalidation level was too high to take on that risk. So I'm like, you know what? Let me lock this in. This is a good place to lock it in. Great. And you can see how that could differ from person to person, right? If somebody was just entering the trade, they could probably have a tighter risk level, right? So that's why everyone's strategy is different. Everyone has to have they have their own approach to the market and their own perspective. That's why you can't follow somebody just blindly, right? It just doesn't work. You won't have the conviction. Very important. So I went 100% Ethereum. Let me zoom in a little bit so you guys can see. Ah, there we go. Man, that's got bigger. All right, so yeah, 35.40, and I borrowed 70K against my Ethereum to buy the dip, right? As I said right here, if price fell further. So what that did was it gave me I had to play on both sides. And what is the trade-off for that? Well, I'm taking on more risk by adding some leverage. Not a lot of leverage, but some leverage, right? So if price were to spike up, my USDC liquidity pool would not earn any yield, but my 100% Ethereum, my spot Ethereum would appreciate in value. Great, I would love it. If we drop down, then I would farm those yields, right, in that liquidity pool. So on both ways, I have a play here, right? So what I did here and what I'm going to show here is that I had an impermanent gain on the market, right? And this is a perfect example, and I think it was a good opportunity to showcase that. So here we go. So my range initially, 29.70 to 34.70. That was at around 3,500, 3,540 Ethereum. Price fell. And here I earned about $1,000 in yield. I'll have the totals later. But then I rebalanced. 2,700 to 36.19. So I went a little wider. Gave me lower yields, but it allowed me to retain more Ethereum if there was a mean reversion back to the upside, right? Which means that as you're buying Ethereum in your liquidity pool, I rebalance to retain more Ethereum on the way up than I did buying on the way down, right? So that equals to more profit, and I'll show you in a second. So we had that, right? There's the new range, 2,700 to 36.19. Still seeing over 100% APR. A lot of volume, a lot of fear ramping up. It's perfect for liquidity providers. So like when people get scared as a liquidity provider during capitulation events, I'm like, why? Why? You have stood up your business front. You are providing business when the opportunity is hot, right? As a liquidity provider, you're providing a business. You're standing up your lemonade stand and you're just selling them like hotcakes, right? That's what's happening. That's how you make money, right? It's definitely a different mindset than trading. If you understand how to trade, then you just kind of you look on the contrarian side of the trade. What is the other person doing on the other side of my trade? You think of it as a trader, you're like, okay, as a trader, I'm thinking this. I should probably stop out. I should stop out at this level. As a liquidity provider, you think the opposite. Where will they stop out? Where are they most likely to stop out? That's where I want to be. See? And then in the meantime, you just generate some business here and there. Then you wait for that Black Friday sale where everyone's just rushing in through the gate, trying to get out. You know, or trying to get in on the upside. But the volume just seems so much better on when there's a lot of fear, you know. So here we go. You kind of read that, you know, go over that if you want to check it out. And then I went ahead and rearranged. I first said that range, but then I went a little bit wider and a little bit tighter on the bottom end. So I went 2,500 to 47.59 at a price of 28.77. Reason why, because my previous low end of the range was 2,700. Getting a little close to that price, right? So I was kind of, you know, I didn't know what was going to happen. Obviously, nobody does. At 2,700, it was around here. I think during this day, I'm like, well, we could go lower. But what is the play here? What can I do here that can benefit on both sides? Well, if I widen out the lower end of the range from 2,700 down to 2,500, I could have more. I could buy the dip a little slower, but still be involved in the market as price continues to trend down. On the upside, I kept it super wide. Look at this. Where's that? Kept it pretty wide than initially, right? Initial range was 34.70 on the top end. 47.59. That would allow me to keep a lot of this Ethereum that I've accumulated. See, my pool was 76% Ethereum. Keep it on the way up. And generate yields as that happened. Right? It's beauty of it, right? Now the next iteration here, I went a little tighter on the weekend. I took my existing liquidity and I just brought in the range. I didn't rebalance anything. I kept it the same. And I figured since it's the weekend, you know, I might be able to squeeze out a few more APRs in the meantime. But I kept it in validation level. In case something happens, it'll rebalance for me. So, literally, I think like the next day it rebalanced. Yeah, rebalanced a day later. And I went to a 2,400 to 6,490 range. That's super wide. Right? And now that further allows me to take my existing USDC that I had left in the liquidity pool and just kind of stretch it out. You know, I figured we're getting close to a bottom. We've been trending down for weeks, right? We had this big liquidation event. Odds are we should see a bounce. And I was posting about it. You know, if we need to see a bottoming pattern, which we did. We saw a double bottom here. And odds are, you know, we might get a move up, right? That's the bet I took. So I extended the top of my range to 64.90, which was super wide. This lets me to keep most of my Ethereum on the way up while still generating yields in the meantime. You know, the yields were a lot lower. They were double digits. So they weren't anything spectacular, but you have to think APRs are based on a yearly time frame, right? A year is a long time in crypto. If you see an opportunity to take advantage of price action and the risk is low, take advantage of it, right? Because this move works out better for someone that's holding most of their Ethereum in the liquidity pool than somebody that keeps it super tight and has to constantly rebalance. And rebalance, what I mean is constantly buy Ethereum on the way up while the liquidity pool is super tight, right? It's very difficult to do that, and you just don't know when it will end, right? What if it, like, you bought up here and it pooped out and then dropped back down, right? Now you got a ton of impermanent loss. You don't know what to do, right? So I decided to go super wide because I'm like, I don't know what's going to happen from here. It could break down. Yes, we could definitely break down, or we could go up. If we go up, I would like to hold as much of this Ethereum as possible and benefit from that. All right, Blake. See ya, man. Have a good one. And then here we go, right here. This was yesterday's update, but then I'll just go to today's update. What I did here is set up a liquidity pool, or sorry, I went into Aperture Finance, set up a pre-scheduled close to remove my liquidity pool at 33.55, which it did. And what I did was I held the liquidity in spot, the Ethereum and the USDC. So I had 13.8170095 of Ethereum, and I pulled that off at 33.55, and I had this much USDC. Total without yield at a price of 34.40 was 73,142. Now remember, I started farming with 70K. And that was at a price of 34.70. That's the impermanent gain right there. So I'm $30 below the price I started farming the liquidity pool. But at 34.40, I'm at a profit. And a nice profit. And that's without the yield. See, my original stake price was 34.70, which was higher than the current price, obviously. So how is my LP value without the yield worth more at a lower price? How is this possible? It requires understanding the mechanics of how liquidity pools operate and using that knowledge to optimize your liquidity pools. So the grand total here, with yield and with price $30 below my initial stake price, $75,102. That's a 7.37% ROI. In less than a few weeks, about 3 weeks. So in a few weeks, earned 7.3%. With that said, blah, 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 whatever. And then I held my spot Ethereum until today, or until later on today, where I set up a very tight, look at this, 34.77 to 34.87, very tight liquidity pool to convert it to USDC. So I converted it, I pulled out the liquidity, the 100% USDC, and that's it. That's me cashing in on that, right? Not only that, but I get paid in yield. I got paid $35. That literally took like 5 minutes. Took me out, done. I'm out. Earned $35 on top of the sale. Not only that, I didn't pay slippage, right? Say if I would have paid slippage on this trade, right? Let's do some math. Let's say 48,092 times average slippage, let's say 0.3%, right? That's $144 in slippage. That's a lot to convert, right? You know, even say 0.15%, right? That's still $72 that I would have to pay, 72 to $144 that I have to pay out of my pocket, out of my yield, to swap this into USDC. Instead, I set up a liquidity pool and I got paid $35 to do so within 5 minutes, really quick. I'd set up a $10 wide pool. Kind of wide for a transaction like this, but I just wanted to see if it would oscillate in there a bit, but it just kind of ripped right through. That's fine. Sometimes people that follow me have seen me make, over the course of a day, on say a $50 wide pool where I'm swapping, I'll make $800 to $1,000 in yield in a day or two, right? And that's amazing. Once you understand how to use it and understand the mechanics, can really use it to your advantage, right? Not a lot of people pay attention to slippage, Slippage is that silent killer. I think it's the ultimate silent killer. It could really damage your portfolio over time, right? And you won't even notice it because it's such a small amount. But over the course of a year, couple years, 10 years, you'll look back and be like, wow, I have paid. I've known people that have paid like 5-6 figures in slippage but they actively trade, right? But I'm just saying, like, over the course of 10 years, you're paying like 5 to 6 figures in slippage. You're like, that money is like, it's just gone, right? There's no, like, you wanted to execute that order, but you're taking on slippage, right? So very important to realize that and pay attention to it. So swapped it. That's my impermanent gain story. Let's see if we have anyone on the Discord. We are here. Let's see. Anybody here? No, I guess not, man. Not many people. I know I kind of just came on. I didn't know if anybody was going to be on, but yeah. So, anyone in the chat want to talk? Nope, I guess not, man. All right. So I guess that's gonna about do it. You know, that's what I'm doing. What am I doing right now? Okay, I'll talk about what I'm doing right now for those interested. Oh, kind of got the infinity mirror going. So what I did was I closed out that liquidity pool. I paid back the loan. And now I am trying out Aerodrome because I was speaking to somebody about the performance difference between Aerodrome and Uniswap. And they mentioned that if you stake on Aerodrome, if you stake your liquidity on Aerodrome, but don't stake the liquidity pool, right, for the emissions, you just earn the actual yield, you will earn more than Uniswap. I'm like, all right. I like that idea. So I set up a liquidity pool. I took my spot Ethereum and I just set it up one-sided. So I think it's 3480. You can see it here. Yeah, see 35.85 ETH just staked. The range is 3470 to 5,000. Which we're about $10 away from right now. So I'm not even in range right now. I might have to readjust it. That's the thing that sucks with Aerodrome is that you don't have automation like Aperture Finance. But it is what it is. But if it can earn me more, probably worth trying out, right? Like if I look here, this is a tool we have, right? If I just type in ETH USDC, you can see here Aerodrome's right on top. 152% APRs. And that's at a 0.04% fee tier. The one I'm in right now is this one. This one's like half, nearly half of what Aerodrome's paying out. So I'm like, you know what? I might as well go over there. Oh wait, sorry, that's Base or Pancake Swap. But here, Uniswap, same thing. Almost half. Half of what it is up here. If you look here, liquidity, 16 million on Uniswap, 15 million, a little less. But look at this volume. 173 million today compared to Uniswap. It's more than double the volume of Uniswap. And that's the key right there. Always go with the high volume. You know, always look for, especially when the TVL is the same. Which one is transacting more? Because each dollar of that $173 million of transactions, there's a 0.04% fee on there. And you can see the fees over the past 24 hours, 69,000 compared to Uniswap, 35,000. See? You'll earn double the amount of fees than you would on Uniswap. I have to. That's a strong. That's a strong case for consideration. And me, I mainly stick on Uniswap. But with seeing that, I have to consider it. I've always been a big proponent of just staying on Uniswap because they are the king. Until the king gets dethroned or there's blood in the water, then I'll consider. And here's a perfect example of that. Double the fees. So say if you were earning $100 a day, there you go. This could make you $200 a day. Same range, same liquidity pool, same assets. Why not? Not even with the Merkle incentives, it still doesn't overcome that. Now I want to test it out and see if it works, right? So come on, price, I need you back above 34.70. And let's see how this plays out, right? So I'll update everyone on that. But yeah, that is about it, guys. That's what I'm doing. And I'm just staying here continuously farming. I'm here in the market. You can almost be certain that I will be in the Ethereum USDC pool. My liquidity will be in there. And you might be in the same range as I am. So we might be like liquidity buddies, earning that yield while everybody's running for the hills. Just saying, like, with Bitcoin, with its ETF, Ethereum now with an ETF, that blew my mind. I didn't think that was going to happen, but it did. That just brings more conviction into my thesis. So it's like, man, why not, man? Just stick in, just keep your liquidity in the market and just farm those yields, man. That's it, and just wait. Stop trying to, if you're not a trader, if you don't trade for a living, stop trying to time this shit, man. You're not gonna outperform it. It's gonna, unless you get lucky, and unless you use leverage. But even then, man, what's the opposite? What's the risk on that? On leverage, right? You could get liquidated, lose all your money, gotta start from zero. And what's embarrassing about that is that people see this chart and then they ask you, "Oh wow, you've been making money?" No, I got liquidated. What? Market's been up only. Yeah, I know, man. My dumb ass used some leverage and that's it. That's the thing, man. Like, people take on too much excessive risk, and especially at the top. They love to just lever up. They want to capture this entire move in one candle. Doesn't work that way, man. Like, you can't force your will on the market. Very important to think that. It's all about thinking right, having the right mindset. And I think that's going to do it for me, man. So enjoy. Thank you for watching. Ask any questions in the comments below, because I'm sure there's going to be some questions on impermanent gain. Right? Nobody talks about that. And certainly nobody really shows that. I've never seen anyone show an impermanent gain. I'm always showing it. I've shown it multiple times through threads and through Twitter, right? And here you go. Here's another live example of where I showed you, right? There's the proof was all here in the video. So just rewind it. If you missed it, check it out. Internalize it and realize, wow, this guy just rebalanced multiple times. And not only did he not have impermanent loss, he had an impermanent gain. Amazing. And I had a profit in the liquidity pool without the yield. So the yield on top of it was just butter, right? The cherry on top. Name of the game is keep as much money in your pocket, right? Leaving money on the table, especially when there's that type of opportunity. Can't let that go often. It does take more risk, though. Takes a little bit more risk, but you got to control that. Control that risk. All right? Anyways, good chat. Have a good night. Peace.